Let's take a look here as we switch over and look at our 60-minute chart of the S&P 500 and see what happened this week. And you can see it was a downslope week. The only big blip in there we see on the upside was for a few moments after that Fed news. Big down move here as the president, as the Facebook news came out, and then the president threatened the pharma companies over the opioid situation. S&P's down 53 and the NASDAQ down 200. That was just foreshadowing the troubles that we were going to see coming later in the week. You could see not a lot went over here on Tuesday. Oil did get a pop on that day. Here was the Fed day. There's that blip right after the Fed announcement where they raised rates 0.25%. Raised their growth outlook, actually, raised their employment outlook, which means that employment they expect to sink down to 3.6%. If that doesn't bring wage inflation, I don't know what will. And they raised their outlook for the number of rate hikes into 2019. Stocks pop and drop, and you could see for the day ending up not a huge change in there. Facebook got a rebound early in the day, and that helped the lift, but then it got really sold hard again, and especially here as Facebook resumed, and then there was this trade war saber rattling going on. Here's where the Trump lawyer resigned, and the market didn't like when that happened. And then here's where President agreed that he was going to put on 50 billion tariffs on China, and then the market got absolutely slammed. Friday's bringing a choppy day in here. The market was very choppy overnight also. Here we come entering into the final hour of the day. We got some stability overnight as the president did talk about delaying the tariffs to 5 countries. And then you can see the pop here because there was some threat that he was going to veto the spending bill. Which is a ridiculous spending bill, if you ask me. And then he decided he was going to sign it. He was holding back over the fact that there was nothing that dealt with the DACA issue, and also that there was no additional money for the wall. So he came in and finally agreed to sign it. The market got a big pop on the upside, and now here you could see selling off. There are sellers waiting in this market. If you don't believe it, you could see it right there as the market tries to rally, and every single time it picks up its head, the sellers plainly come back in. This is a very weak market environment. I'm sure you've noticed my style of charting is different from most analysts. It's called cycle analysis, and I've been studying this style of analysis for 43 years. Now you can learn it. In fact, you can bring this into your own research. I have just finished recording our cycle analysis workshop. These are 20 video modules that are going to take you through a very great step-by-step process to learn this style of charting. You're going to learn how to take a very basic chart that looks, well, like this, and then take it with each of these steps to get it to look like this or this. This is an amazing difference and a ton of information that comes to you off of those charts as you learn to project forward in time and price. Not only are there 20 videos, but there's also over 20 videos that we attach from our video library that are supportive to these lessons. It's going to be a whole different way that you look at charts. In fact, you will never look at charts the same way as you do right now after you take this workshop. It's going to improve your entries and exits. It's going to raise your win-loss ratio, and it's going to greatly improve your odds of success as a trader or self-directed investor. Go to the front page of AskSlim.com. Go to the bottom of that page. You'll see a puzzle piece that says Cycle Analysis Workshop, and just click on that and register. You're only going to be able to do that till April 1st to get this 30% discount. After that, we're going to be at full price selling it there. So make sure you get on our waiting list, and once you sign up, then around April 1st, we're going to send you a special link to go to that page for you to get all the information about it and then sign up for that great price. It's a great investment, and it will make a huge difference in your career going forward. Thanks for listening. All right, so the last thing we're going to look at here is the S&P 500, the stock market. I'm going to expand it a little bit. I want to show you something else. S&P 500, we said, was going to have a down week, and we thought that it would decline to 2722. It got much lower than that. And the NASDAQ, we said 6914. It got much lower than that. Then we thought that if there was a rebound, it would be either today on Friday or it would be early part of next week. That analysis holds up really well, not price-wise, but pattern-wise, as we switch over here and look at the S&P 500, which I think is probably making is probably having a capitulation here at the end of the day on Friday. We're down to our last few minutes of the day in here, and you can see that the selling is coming in pretty hard as we're late in the day down in the S&P 40 points. So just tried to rally after the president signed signed the spending bill, and then afterwards it fell something like 40 points. So the what you can see in here is what we had thought before. This pattern in here coming down. This is a 14-day cycle right over here. This is day 14 right over here. Now 14 is short, especially short for a declining market. It's for rallying markets, you tend to shorten because the buyers are aggressive. When the sellers are aggressive, this tends to lengthen out. So that's why I wasn't sure if we'd get a bottom here or get a bottom early part of the week. What we're looking at, and now this resistance zone declining has declined since. So it's not exactly positioned right. I believe we're going to get a bounce here in the coming week, and that bounce is likely to get into the bottom of this resistance zone. The rally could last 8 days. It could last 3 days. It's really hard to tell. I don't think it's going to last more than 8 days, but you could see this rally here was 8 days, and then it rolled over pretty significantly. Once you get the bottom here, and this target number here is at about 2580-ish or so, right there at that 78% fib, then you get the rally in here, and then you roll over again, I think, for another slam after that. So we're looking for a bottom to form here early part of the week, and then fail. Momentum here 2 days ago has turned negative in the S&P 500. You can see that. We're going to call for a choppy week coming up where it bounces early and then is not able to hold bounces. Maybe you get one big relief up day in there, but overall we expect it to be pretty choppy. The NASDAQ pattern in here, similar. You can see this has this cycle support breakdown right here. We have that on the S&P 500. I should have mentioned that to you. SPX. Let's just go back there because I don't want to skip that important point. This low over here got broken. That what that says is that our intermediate pattern on the downside is now proven. Would raise the odds of that intermediate declining phase. So we have this breakdown that happened late yesterday or confirmed here today on Friday, and that says that the correction that we thought would resume into this late springtime is here. The NASDAQ now again back to that. The same thing of the breakdown right over here. You could see this getting a little below that low. Again, we're looking for a low here in the next couple of days and a bounce into this sell zone. That sell zone is not placed in the right place because of this decline late in the day. Our level 4 members will get an update on that this weekend, and then have those numbers in place after the close here on Friday. The Russell RUT, you can see here it's only at the 78.6. In other words, it didn't break that support level yet. The Russell's been the strongest index, but I got to tell you, I think it's going to become the weakest index as it's starting to get slammed right now, and those very, very overpriced second and third tier stocks are likely to get hit very hard at some point in here. So this, you can see again, same thing, bottom in the next couple days, and then get a rally into that resistance zone and then fall off very, very sharply. There's one more thing I want to show you before we wrap up this show. I mentioned the ASLM market condition indicator. This is an unusual indicator in that it's built on multiple time frames. What it does is gives you I'll tell you that it's built from weekly down to intraday indicators. And the reason that we do that is that when you get a market that is strong and rallying, just as an example, and then it starts to fall, if the longer term internals are really strong, then the decline that you get as a corrective decline will not allow it to break below what we call the swing zone. Now, here is looking at all four indicators right in here, and I'll talk a little bit more about that. So when I look at the S&P 500 right over here, here's your swing zone, 25 to minus 25. That is a key thing here. So when the market was strong and you got a rally, you got a break or a correction here into the swing zone, when it moves back out of the swing zone, it tells you that the internals are very strong and that the market's still actually in good shape. But then when your next decline comes and it moves through the swing zone and turns red, it tells you that there is damage done to the longer term and that this is something real going on the downside. We now have the S&P 500 plunging through the swing zone, giving you this negative 74 reading. We have the Dow Jones Industrial Average having been the first one that did that, and actually got up to the swing zone and then broke right over here, which tells you this is really negative right over there. And now you have the Russell starting to move down through the swing zone. Also, only the NASDAQ hasn't done it yet, and that is not going to, I doubt a lot that it's going to be able to avoid. What we're getting in here is the messages that the internal situation in the stock market has deteriorated very significantly. You could actually set up these grids using, 4 different stocks in a group, or comparing other symbols that you want to compare against each other, or you just look at each one individually. We put the market condition indicator right on the charts that we share, and it's I think very helpful to our members. They get the level 4 members get the script for that and the option bias indicator. So really a negative message that we're getting for the stock market right now. When I look at that, it tells me that if the internals had held up in that first break that we had a couple of months ago, that then this decline that we're getting in right here would be showing us that it wasn't able to break down through that key swing zone. But now they're all breaking down through it, and it says to me that the problems are big and that the stock market is likely to continue to try to rally and fail and continue to trace its way down until this decline or this correction is over with. And again, watch our big picture analysis to get a sense for how we projected that out and where that's coming from. Our longer term monthly cycles and weekly cycles tell the story. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel and also go to AskSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.